Welcome back, ladies and gentlemen, to the All in Crypto podcast. I am your host, Rupert, and today I am delighted to be joined by two special guests. We have Adrian Fritz, who of course is the head of research at 21Shares, and we have Alistair Baez-Perry, who is the VP head of capital markets over at 21Shares. How are you both?
Very good, and you?
Doing excellent. How about yourself?
Doing fantastic. I was just saying it's a rare sunny day here in the UK, but all the better for sort of having you guys on the podcast, and really exciting to get into some of the topics that we have, predominantly focused on how crypto is kind of entering the mainstream investment arena. And with all my guests, I really like to start off with a little bit about themselves. So perhaps from both of you, if I could just get a little introduction into sort of how you guys ended up in the cryptocurrency space, that would be great, because there's a very eclectic group of us here.
Sure. So how I get first into crypto, I think was 2017. One of my best mate was really into Ethereum, and I was already looking at finance. I used to work in a traditional asset manager at that time, and we had the Bitcoin, listing of future in the US. I was very interested about that and thought, could be a interesting development. Read some books regarding Bitcoin, specifically at that time, and then Ethereum with smart contract. And as I was working in ETF, I thought that ETF was the perfect wrapper for actually assessing the space, because at that time I tried a bit on chain, and I thought it was a bit complex, especially for mass adoption. So I did build a bridge into that later, and I joined after 21Share now 4 years ago. But it has been a long journey already so far.
Yeah, on my side, the first time maybe I got in contact with Bitcoin was 2013, 2012, 2013. A friend of mine who was in computer science, he was always curious on the internet, I want to call it like that. But yeah, I got fascinated by it. And back then, I actually asked my stepdad if I can have some money to invest in Bitcoin. It took me almost a year to convince him. And yeah, I joined at one of the tops. I invested, I think, at $1,000 back then, and a week later, the whole entire market crashed. So I lost 80%, and I absolutely loved it. I was hooked. It was also the reason why I went into finance, I want to say. But it took me a while, because most of my career I spent in more investment banking, merger and acquisitions, in management consulting and corporate finance. But I always had that massive passion for financial markets, and especially crypto, because it was always the most fascinating, most exciting sector. And yeah, 4 years ago, I also joined 21Shares, and now our crazy hobby became our profession, which is quite nice.
Yeah, it's kind of like dog years in crypto, isn't it? Sort of 2017 till now doesn't really seem that long, but it's almost like 100
It's
years.
unbelievable, yeah.
Absolutely. Absolutely. And I think, 21Shares is the largest kind of ETP or exchange traded product provider as it relates to the cryptocurrency markets, certainly in Europe, predominantly or more broadly in the world. I think one good question to ask is, a lot of people, when it comes to crypto, have a kind of self-custody view in mind. And I at one point did, until you kind of understand the unlocking that creating products around the cryptocurrency space actually brings. Like, for example, in many cases, lower fees, you don't have to worry about self-custody, all of this sort of stuff. I think it's a really good place for us to kind of start by explaining why we should facilitate ETFs, ETPs, ETNs in the UK around the cryptocurrency space. Why should investors care about this sort of stuff, and why should we do it?
No, definitely. That's a great question. I started also on my side first self-custody. I moved most of it as well to exchange traded product. And the reason, not because I'm working into that, is because it's the ease of use, it's regulated, and you have institutional grade services. So from a custody point of view, from a liquidity point of view, you get the best as if you were a big institutional, even though you are a retail investor. And I think that's extremely important, because as a retail investor, generally speaking, you may not have access to those very sophisticated institutional grade custody, insurance, if anything goes wrong. Whereas again, with the ETF or ETP, you benefit from the economy of scale. An asset manager or an issuer like us will be able, therefore, to leverage all the whole assets that we have in order to bring the best infrastructure to the client. So I believe for an investor also, another benefit is, generally speaking, you manage everything in your same portfolio. So, like we were just discussing, crypto might be volatile, might be 80% down, might be also 100% plus up. And therefore, sometimes you may want to rotate your portfolio. You may want to be taking profit in some area, for instance, digital asset, reallocate in another piece, a part of the market, maybe that you have a bullish view on, the US market, UK market. But you can also do reciprocally. If, for instance, right now gold is at all-time high, by having maybe gold ETC, you may take some profit and reinvest into digital assets. So I think it's a great tool as well for retail investors, but professional investors, to manage their portfolio, manage their risk in an easy and liquid manner.
And I would also maybe add, we understand that sometimes it might be frowned upon having this traditional regulated investment vehicle, because it might go a bit against the cypherpunk movement and spirit. But I think it's about optionality. So the beauty here is, if you want to go via direct investment, you still can with Bitcoin. If you, let's say, a family office or a private bank, an ETF, an ETC, or an ETN might just be the easier, more convenient solution.
And what I love also about, especially in Europe, ETF or ETPs here, they have also a physical redemption, some of them, in terms of option in their prospectus, meaning that for an investor, they may start the journey in digital asset by investing through an ETP, and may at one point ask a physical redemption for self-custody if they're ready to. So I think it's a good introduction as well for people that don't want to risk their whole asset if they forget their seed phrase, or they don't understand why they should remember those random words on a piece of paper. So I think it's you will always have different type of custody model, and I think it's a good option for the investors to have access to both.
Yeah, and I think as this kind of asset class more broadly starts to really integrate into people's portfolios, ETFs are the kind of link. It doesn't have to be ETFs, ETPs, ETNs, whatever it may be. These vehicles really are the kind of gateway into the cryptocurrency space from an investment point of view. And I think that's very, very important. And actually, in enabling that, it brings a lot of benefits with it. You mentioned optionality, of course, is always a good thing, I think. But actually being able to leverage the likes of 21Shares custody solutions, oftentimes fees, you get really bad fees on exchanges. I know that firsthand. There's a whole list of reasons. Somebody like my grandparents, for example, are far more likely to invest in an ETN or an ETP than they are the actual crypto themselves. Certainly, as far as self-custody goes, it's just a bit of a nightmare. And this stuff needs to be easy to do, right? It needs to be, nobody wants really the hassle of, having multiple accounts to take care of. So totally on board with what is happening right now as far as products are concerned. Let's talk broadly about what's going on right now, because it's not every day that a new asset class kind of spawns and then actually finds itself being enabled to become a part of people's portfolios and investment kind of theses. As people at the kind of heart of this, certainly at the heart of 21Shares and what you guys are enabling, what do you see taking place broadly right now? A big kind of overview in regards to this new asset class that started with Bitcoin, and now the kind of shift towards it perhaps as a diversifier in many cases in people's portfolios. What do you guys see going on here? That's a big loaded question. I'm sure there's going to be lots of streams that we venture into, but it's kind of remarkable, right?
I mean, 100%. I would say we've been with the company for 4 years now, and in the industry even longer. I would say you see a lot of curiosity. Obviously, a lot of times, especially with traditional investors, at the very beginning, they might be skeptics. but at one point it becomes intriguing, and at one point they become very curious. So they definitely want to learn more about it. And that's why at 21Shares we think research is really, really important, because providing the right education really helps those traditional investors understand that new space. But I agree with you. I mean, the beauty here is that we're witnessing the birth of an entire new asset class. So for every portfolio manager, this should be an absolute dream, because you have an uncorrelated asset that moves and develops completely by itself. And for a portfolio composition, it's a perfect tool. So again, I think a lot of people should be happy and intrigued about it.
And I think what's also quite interesting with digital asset or crypto is that it's a mix really between technology and financial instrument. And therefore you had like the tech people very excited about the tech, and the finance people maybe a bit excited about the finance piece. And here it's really a mix between the two. So sometime we also met, and 4 years ago, especially when we were joining and doing all those research, we had a lot of feedback from like, oh, I really love the technology, but I don't believe in the investment thesis. And I think now people realize that the technology is also linked to the investment thesis, and you can't dissociate both. So yes, we are going through, I would say, a cycle of adoption. The US ETF last year definitely helped because you gave more regulatory clarity. Most of the big banks or asset manager were maybe a bit reluctant to take the first step into that direction in the past because of maybe lack of regulatory overview on their side, and not sure if it was legit. We had the FTX scandals few months before, so people were like, almost "I told you so" kind of thing. Whereas until you have the Bitcoin ETF approval, I think that shifted the whole narrative, and now it became a legit investment again for investors that were looking at it. So definitely very interesting how the people mind is shifting as well. The different discussion we have with people that were closing the doors for so many years and now are kind of calling us almost in a fear of missing out, like, hey, actually I need to understand what you were mentioning 3 or 4 years ago. So it's quite refreshing.
And that's why we love that job, to be really honest. I mean, we both come more from the traditional side, but being at that controversial side, it's so nice, because there's some clients, again, they're super skeptical at the beginning, but you meet them over and over and over again, and you slowly see their heads turn, and at one point they usually become almost fans, because I barely know anyone that spends a lot of time, for instance, on Bitcoin and doesn't become a fan. So it's really just a lack of understanding most of the times. And of course, it's an expanding horizontally and vertically expanding space, and there's so much to unpack still.
Yeah, absolutely. And I'm hoping to unpack some of it with you too. I really like the kind of duality that you brought up there in regards to this space offering investment, perhaps in regards to Bitcoin. That's been put forward by the likes of BlackRock as a kind of hedge, perhaps, against the dollar and proliferation and things like this, which is kind of where it came from. But there is also a technological aspect to all of this in regards to the impact that it's going to have in our world. So I'm a big believer that the evolution of money is stablecoins. I think largely the evolution of finance is on chain for simple reasons, such as not many of us send letters anymore, unless it's for something quite serious. We prefer to send emails, right? We transact information on the internet just because it makes sense to do so. In the same way, I think finance makes sense to be on chain. What chains sort of enable that, I think, are going to be quite valuable. That's my own personal take. Maybe we could talk about the distinguishing before we get into trends that you guys see in the cryptocurrency space, like the evolution of money, the evolution of finance. Maybe we could get into the distinguishing, because surely you guys think about this as you offer products, between perhaps Bitcoin, which I look at as more of an investment, a hedge, perhaps similar to gold, and the technological aspect of all of this in regards to how it's moving us towards a more digital world. This is something you guys have got to think about, right? That there's two kind of components to this, like you mentioned.
100%. and again, it really comes down to education and explaining to traditional world that not all crypto assets are the same. That's one of the biggest misconceptions that is still to a certain extent out there. They just think it's all just some sort of digital money that is trying to compete with fiat currency. But as you perfectly pointed out, I think now for Bitcoin, there's a solid understanding that it might be some sort of digital gold, a hedge against currency debasement, for instance, while something like a Solana or an Ethereum, completely different value proposition. Built on the same technology, yes, but the value proposition completely different. Here, definitely more of, I would say, a platform for innovation, almost like a software play. And therefore, within a portfolio, it also should sit next to tech equities, in my opinion. While a Bitcoin might sit next to commodities, alternatives, gold, Ethereum, Solana could more sit next to tech equities, for instance. That's just one example. And then obviously, there's many more features that need explaining in the crypto space.
And then you build on top, and you have then the dApps as well.
Yeah.
And when we think about our product range, we differentiate that into exactly that. Like, is it a layer one where you build on it? Is it like something that, as said by Adrian, like people are building on it? Or is it something already dedicated to a specific theme that we believe blockchain will have an impact in the future? For instance, in DeFi, where we will bring maybe like decentralized exchanges, lending or platform. All those type of things, when we explain that to clients, it's where we indeed position like where the technology is actually going to shape the new world into that type of environment, and therefore they can invest into that. Whereas it's absolutely not a narrative of like that's going to replace your currency. You won't pay in a uni token anytime soon. Your bread out there, but you might use the Uniswap, for instance, DX in order to swap or to take anything else. So I think that's where we come into play. And when we look at our product offering, we try to cover those narrative plays through an ETP if we can, and explaining to investor why we think that's an area of development for the blockchain industry.
I think one big topic is staking, for instance. Like last year, we had a bigger staking campaign because this is a typical topic that is very appealing to traditional finance. Obviously, traditional finance loves everything that generates a yield or a cash flow, while staking at the very beginning seems very complex and potentially overwhelming. It's not so much different. And again, if you really hold their hands and bring them closer to topics like that, I think it's quite effectively in those conversations.
And this is what I love about 21Shares, honestly, because this is kind of the consensus that I get from you guys is a large part of what you do is actually education towards this industry by people that understand it. Not everything is trying to be a Bitcoin. There's actually multiple components to what's going on here, and educating people about that is a large part of enabling them to invest in it. And then bringing things like staking products, that's actually something that I did want to get onto, and we can maybe segue into before we talk about trends that you guys are seeing, perhaps from an investment point of view or a technological point of view. What do you think about staking? Now, do you guys currently offer staking products, I believe, in Europe, not in the US? Surely, just quickly as a question for both of you, you've got to be watching what's happening in the US and kind of going, this is absolutely a win for the industry, right?
No, definitely. So 21Shares was actually the first ETP issuers to offer staking in 2021 on Solana. So we started with our Solana ETP in 2021 to do staking. And in Europe, we have been at the forefront on that to enable staking straight away as soon as we could and reinvest the staking reward into the ETP. Therefore, the investor would really get a participation into that staking reward. Europe has been at the forefront for many years in terms of innovation, especially Switzerland, allowing issuers like us to list more ETPs or to do staking or to do, for instance, also in kind. That was a big debate in the US. Very excited about staking because, again, I think you're securing the network, you're participating in the growth of the network, you're allowing your investor to participate into that growth. And I think it is something, as said by Adrian here, like traditional investors, they like the fact to get a yield as well. They understand that type of concept too. So overall, very, very, it's a growing industry. We have on our side around almost 1 billion of staked assets in Europe, mostly around Solana and Ethereum. And in the US, yes, we have been the first issuer to file for staking on Ethereum, on our Ethereum product. It's still with the SEC on that. Quite excited about the development done here from the industry. I think a lot of players are meeting with regulators in Washington, D.C. To allow staking in a certain way. It's going to definitely develop further the US market because if you do not participate into the staking, you may, as an investor, and if you are holding, let's say, Ethereum or Solana without staking component, you may miss out on the total actual Solana performance due to the inflation rate, for instance. So I think it's relatively important to be able to provide that growth that is actually enabled by proof of stake. So a lot of work still to do to allow that in the US, but we have been quite excited and are looking forward to further development in the US around that.
Yeah, there is a hell of a lot of work to do. When you think about where this industry is and where it's going, 21 Shares, you guys have got a hell of a lot to do in regards to kind of enabling
a lot of education as well on that, because
Yeah.
it's staking is different by every chain. So first of all, you start like this. You have a fixed unbonding period, you have variable unbonding period or bonding period, a minimum of stake maybe. Even from an issuer point of view, the way you manage staking might be very different. So you need to work with top tier staking providers in order to navigate the space correctly.
It's a massive topic, and as Alistair said, from an educational side, of course, it works different for every chain. And again, here we have to play with a lot of analogies and a traditional financial language. So, for instance, we call it something like crypto native dividends, for instance, because this is a concept that is a bit more familiar to traditional investors. And then on the operational side, it's really important to be deep in the topic, because it comes down to liquidity management, risk management, because we always got to make sure that people can go in and out of our products.
Absolutely. Yeah, there's a lot to it, and education's a big part of all of that. As it relates to this sort of asset class, becoming that and being enabled, surely you guys speak to a lot of institutional investors, a lot of funds, a lot of trusts, whatever it may be. What would you guys say from your experiences is that the consensus towards this asset class is? Would you say it's kind of 50-50? Would you say people are still a lot more skeptical towards it? Would you say a lot more people are on board? And with those people that are on board, how are they looking at that perhaps from an allocation point of view? That's going to differ wildly, certainly from jurisdiction to jurisdiction. But what's kind of some of the trends you guys are seeing from more of an institutional point of view when it comes to this space?
So it will depend indeed massively by jurisdiction, I think. In Europe, we see Switzerland, Germany very well advanced into the adoption. Also, most likely due to the regulatory clarity around the asset class, very early stage, versus some other countries that have been catching up. The US, for instance, approved it way later. That being said, the adoption has been growing massively and very rapidly, and they are catching up extremely quickly. We see that from report that has been published publicly around who is holding the Bitcoin ETF or even the Ethereum ETF. We see pension fund, we see some of the states pension fund and everything else. So it's quite, I would say, also dependent on that now. But definitely investors have been looking at further allocation with the right, I would say, tool. So you need more ETF or ETPs available in order for also accessing the space, and also more, I would say, regulated financial instruments such as futures. We saw the Solana CME future being listed 2 weeks ago in the US. Those financial instrument is what will actually allow as well large institutions to also allocate further into their portfolio, because they need those in financial instrument that they are familiar with first as well. So it helps.
So yeah, it really depends on the investor type, the jurisdiction. But usually I think the conversations that we have is in terms of allocation size between 1 maximum 5% of a traditional portfolio. Obviously we did a lot of backtesting, a lot of analysis, and what we can see is that usually 1 till 5% is the sweet spot and benefits the overall portfolio. What is kind of striking and always has been the key takeaway was that rebalancing is super, super important, because only with the rebalancing you're able to capture the upside potential of something like Bitcoin and mitigate the downside. And this is like truly reflected in the risk adjusted returns. So the Sharpe ratio increases significantly, but you got to make sure you have the right rebalancing strategy to keep that volatility under control. But once you show those kind of like insights to a portfolio manager, for instance, they think it's actually very appealing and take a closer look. And a lot of times we do see an allocation coming through.
Yeah.
What I love as well.
Sorry, after you.
Yeah, no, what I wanted to say, what I love about what our research did as well in order to bring those institutional investors was to use the same type of metrics or ratio that they look at when evaluating any type of assets they are looking at. When they analyze an equity, for instance, or stocks, they maybe look at the DCF. And for instance, that has been used a lot widely as well in order to value, for instance, how do you value Ethereum or Solana or whatever, maybe looking at what the network is generating as a fees in order to be able to derive a value. I think being able to show them that there is a way for investors and traditional portfolio managers to compare that valuation versus their model when they value any type of stock is also a very interesting tool, because they might think, okay, actually that one might be underrated. I might actually allocate it because I think there's fees generated on the network and everything else might actually drive the value up into that investment. So we are also bringing back traditional valuation model into digital assets.
When it comes to portfolio management, I think it sounds a lot more simple than it is. It's often quite complex. The formulas that go into it, you need to be a mathematician to understand often. Certainly from the kind of peering behind the veil that I've had, there's a whole lot that goes into it. And I think given the kind of infancy of this industry, even though it's been around, since 2008, there's a lot that's still to be worked out, resolved, and kind of proven to get this to the consensus right now, which is, as you correctly say, between 1 to 5%. 1 and 2% seems to be the kind of overall consensus right now. If you were to take a guess in regards to where we are today and sort of what the time frame or timeline is towards getting to that 1 to 2%, where would you say we are? Because to me, it doesn't seem like, yes, Bitcoin, fastest growing ETF in history. I think BlackRock's IBIT Bitcoin fund has more in it than their gold fund. I mean, that's just an unbelievable achievement, right? And really shows the appetite here. But in regards to people shifting towards actually incorporating this in their portfolio, maybe 1 to 2%, where would you say we are in all of that? Are we still right at the first innings? Not many people have done it. Maybe some take on that would be interesting.
I think not so many people have done it yet. I think we have still a big leg up in terms of adoption on that. I think you start with the most risk profile, like the one that I appreciate to take that risk and may have a tech portfolio, may have a portfolio that already is looking at those kind of niche market or frontier market here and there. We are not there yet in terms of mass adoption into all the traditional portfolio management of 1 to 2%. It will come, and I would say most likely in the next 24, 36 months.
Yeah, and it also shows in kind of the investors that we have right now into our products. For instance, it really started off more with, I would say, family offices, because obviously they're very flexible, they're a bit more risk taking. You see smaller hedge funds at the very beginning, private banking, high net worth individuals, while institutional adoption, now I'm really talking about pension funds or big insurance companies, we're really at the very, very beginning.
And they don't want to be the first mover. Better to be 2 or 3 years late for them than actually taking that unnecessary risk for them that they see, because they manage a different type of portfolio as well. Like they're not trying to be like slightly ahead of the curve on that. They don't need that neither. So we are talking really about the one that may have been the first mover advantage, that may have therefore more flexibility. And when you talk with large institutions as well, you have many decision maker. So given you have many decision maker, you may have one that may still be stuck on his idea that, it's all a scam and it's a Ponzi scheme or whatever. So takes also time to change the mindset of everyone in a group, but it's definitely moving in the right direction for a few months now.
Yeah, family offices seem to be the ones that have kind of jumped first predominantly. And then, like you say, when it comes to larger institutions, I mean, why would they want to take that risk, right? It kind of, you've got to see it from their point of view as well, which I always try and do. It is very interesting. And I think, realistically, this could all perhaps not work out in the way that we certainly envision it to do so. Obviously, we don't think that's the base case, but I think once that equation has been proven, it really does just enter or open up the floodgates. And in regards to trends, you guys are going to be pretty much on the beat when it comes to trends in the cryptocurrency space. Of course, everyone knows about Bitcoin, perhaps the reasoning behind it. What kind of trends are you guys seeing prevail when it comes to the cryptocurrency space? And surely you're looking at the trends out there that you think are going to see mass adoption that this technology is going to enable, and going, okay, what products are going to enable this? We're talking stablecoins, real world assets. What kind of trends are you guys really focused on right now?
I think you mentioned the two biggest use cases and product market fits of crypto, which are stablecoins and tokenization or real world assets. I think those are amazing use cases, and they will disrupt many, many industries. And now we're at the stage where we need to implement it. We have the technology. We need to reach mainstream adoption. We need to go for the actual implementation. While the problem here is, though, that within the crypto industry, things like you and us maybe, and many people on crypto Twitter, for instance, they're always looking for the next big thing. That's why it seems like the sentiment is really down at the moment, because we're looking for the next narrative, the next big innovation. We might have a bit of PTSD from the cycles before because we got burned. But let's not forget, stablecoins is a massive, massive use case. And reaching this global adoption, that's a massive opportunity. And I think we're really at the implementation stage right now. We see this with many projects that are launching. We see it with the administration in the US that is fully going down the stablecoin narrative, rather opposed to CBDCs, for instance. So from that point of view, there's still so much to grow. And the same is for tokenization. Tokenization, again, also we believe that everything will be tokenized eventually. And what is tokenization? It just means taking a traditional asset and taking it out from the legacy financial rails and move it onto a blockchain. That's all it is, basically, in simple terms. But again, like this, the implementation, it will take a few years, but it's one of the biggest use cases we could think about, because it comes with global composability. And finally, finance is catching up with the speed of the internet.
And one last item for me that I still think is one of the most robust, therefore, use case as well from crypto here has been the lending and borrowing market, DeFi market on that. Like we saw that, centralized party can not be very transparent, and you may take a counterparty risk. What I love about digital assets since the beginning has been the transparency. So let's not enter into the debate of centralization, but at least the transparency point is for sure guaranteed on that on-chain transaction. And the lending or borrowing market for digital asset or whatever you want to put there actually, in my opinion, has been super resilient during the last bear market. We saw many centralized parties failing and going down, whereas decentralized finance, those type of protocol like Aave, for instance, stood really strongly and had no issues at all because of the way it operates on that. So I think that, plus, for instance, putting your Bitcoin at work, because I think still 60% of the market is Bitcoin. It's native and it's sitting there. No one is actually doing a lot with it. I believe being able to use Bitcoin into various other application dApps or on-chain or other chain, being able to bridge them or use wrap version of Bitcoin across multiple chain in order to finance the new type of economy that you may see, marketplace or whatever, into those chain. I think that's also going to be still very resilient and one that is still very untapped. Whereas I could see a lot of growth in that area.
DeFi again. Yeah, DeFi might not be the new kid on the block, but there's so much potential going forward, and we truly see this convergence of traditional finance and DeFi right now, as you mentioned, with Aave and Aave Horizon that they recently announced. Also, kind of like permission pools on Base, or the integration with Uniswap hooks. So there's a lot going on, but we really see those two worlds collide. And it just makes sense, again, because it is the better infrastructure, the better technology.
Gets sort of swept under the rug, DeFi, quite often when people talk about the crypto space broadly, because like you say, it's not the new kid on the block. It's not the sexiest thing right now. However, DeFi is very sexy, certainly when you talk about the kind of tokenization of the world. And, as somebody that took part in kind of DeFi summer and watched that whole thing play out, actively took part in it, big user of Aave at one point, obviously you got a number of them out there, and I'm really interested to find out how you guys are, or what you guys are trying to do around all of that. If you think about this tokenized world that we're moving towards, well, if I can borrow against my Bitcoin, why can't I borrow against my tokenized house or the money market funds that, there's a hell of a lot of money in 27 trillion, something like that, 7 alone in the US. The world kind of opens up. And that is such a big deal that I don't really see get spoken about that much. It's kind of crazy, right? DeFi is a key component, right?
It's a way to, again, finance has been invented for that. Like, you finance project that you believe in. By doing that through DeFi, you put indeed your real world asset, and maybe people will try first with a BTC or a wrap Bitcoin, but at the end, the end goal is that your collateralization of your real world asset is allowing you to use that as a USDC loan, again, coming back to stablecoin, and using that stablecoin to actually invest or finance a project that you have a long-term view on, or that you want a revenue on, staking yield or anything else. So that's where you fuel the economy. I see that really as the key mechanism to fuel the whole digital asset economy. Without a robust DeFi, you won't get very far neither in terms of financing otherwise. So I believe it's, again, not maybe the most sexy one, but definitely robust.
It's true. Yeah, I mean, I think what we have to keep in mind, in the future, 100% of the portfolio will be digital assets. That's my opinion. What are those digital assets? Maybe 10%, 5 to 10% will be crypto assets. Others might be tokenized equities, tokenized real estate, or a tokenized art project from an up and coming artist from Guatemala. Who knows? But again, it creates this global composability and liquidity, hopefully, which will make things very, very interesting.
This is the really interesting thing as well. You mentioned art from Guatemala, right? That would just have never been possible without DLTs, right? And there's so many components to this. I'm sure we could do like a 24-hour podcast if we wanted to on each individual thing, easily, But when we talk about people move or the world that we're moving towards, portfolios entirely shift, because there's going to be so many opportunities and liquidity kind of enabling things that this technology brings. It's almost impossible. We're already seeing, I think, that 60-40 shift. Maybe not entirely, but I think more and more people are going, well, why are we, we can do other things with this, and certainly with all the things brought on. One thing I want to come back to 21Shares in regards to DeFi. Surely you guys look at DeFi and you go, there's an opportunity in here in regards to enabling strategies with it. I know we're not there yet, but this is something I'm sure you guys think about. There's an opportunity with perhaps enabling, and could you even do this like a DeFi exchange traded product strategy? Is that something?
We actually did it.
Yeah, let's explore that.
Yeah, no, we actually did it. So we as 21Share, we have been using DeFi into various of our portfolio. So we had short products that were therefore replicating the performance of Bitcoin or Ethereum with a daily short, and we were therefore using DeFi protocols to replicate that. The reason was mainly because we didn't want it to take any centralized counterparty exposures, and DeFi again might be expensive to use sometime. You may have, maybe higher funding rates than a centralized party, but you don't have that counterparty risk. So you take an approach where you will actually accept the fact to pay maybe slightly more, but without the counterparty risk. And that counterparty risk is priced in there. So definitely something we are keeping our eyes on that. It is something that I think again, will develop even further. You need a further liquidity, but it's definitely something we have been already using through our ETP or even through just our internal checks.
We have a lot of ideas, to be honest, and there's a lot of things that we're excited about. But obviously, it's a fine balance between like how far can we push the envelope, how much does it make sense from a commercial point of view at that point in time. But yeah, DeFi again, we're very excited. You definitely see more innovative and more exciting products coming out from 21Shares in the future. But it really is just a time and adoption issue, I would say.
And it goes back to one of your strengths in the sense that you guys have to be accountable. And that I think really is a strength rather than a weakness, in the sense that you kind of can't be too degen, right? You can't. I mean, not to say you can't, but you have a responsibility to people to essentially not go too far outside that sort of risk curve, because then it's a bad look. And I think that's a strength that 21Shares has, not a kind of weakness.
Sorry, we always say we have a fiduciary duty towards our clients. So it's part of our strengths, as you said. On that, we have been navigating the crypto journeys, and it's volatile, and you have news here and there, and we just try to keep the whole of our investor at heart, and how to make sure that they have a product that actually is here to perform what it's meant to do, meaning tracking the underlying price or providing them access. And that's what we do.
It's just so funny, like a lot of times, because we really sit in the middle between those two worlds. Of course, we always portray ourselves as kind of this bridge between the crypto world and traditional finance, which we are from a research point of view, from a capital market point of view, from a product point of view. But it's just so funny. A lot of times we go to a lot of events, and those events can be either crypto native or traditional financial events. And it's just so funny because on a crypto event, we kind of like the TradFi people. That's how we're seen, because we might be a bit more conservative. While on a traditional financial event, we are the most exotic ones. So here oh no, those guys are doing crypto. So it's just so funny to see how we really between those two worlds, I would say.
I think that's a good thing. Yeah, I think generally that's a good thing. Often people that do things first or kind of outside the realms of normalcy get kind of laughed at initially, and then all of a sudden, everyone's looking at memes on their phones, which seemed like a strange idea when the internet was first created, but now is a reality of how most people spend their time. It's insane how much. So I think trailblazers always get kind of met with a bit of hostility, but that'll fade. And I think it's very interesting how you guys are really in that middle ground, and it's why we're so excited to talk to you both, is because you've got a good insight into both. And as far as 21Shares is concerned, you guys offer a hell of a lot of products already. We've spoken about some trends. One trend I would like to speak about before we talk a little bit more about the products and perhaps up and coming products you guys are looking at, and I know there might be some restrictions on what you can disclose. What do you guys think about AI and crypto? Is that just two buzzwords that have been suckered together and now trying to be sold to everyone? Or do you think there's something really more fundamental going on there? Because I personally think that there's a good marriage between AI and crypto in regards to provenance that blockchains can offer. How do you guys think about AI and crypto?
100%. Obviously, been a big topic within our teams over the last 1 or 2 years, I would say. A lot of brainstorming, how those two technologies are coming together. We always thought the first big use case will be authentication. Basically, meaning now, given that I still remember a couple of years ago when I saw Will Smith eating spaghetti for the first time, and it looked terrible. While now it looks so real. If I would show it to my mom or my grandma, I'm sure she couldn't tell that it's AI generated, which is obviously there's a lot of opportunity for that. But on the flip side, I see it as a massive threat as well. And given that we just had a presidential election in the US, I thought we'll see much more of those AI fake videos, basically AI generated videos. And that's why I always thought, okay, blockchain technology and crypto is the way to go. It's really the watchdog of AI, the remedy for these kind of things, because you need to prove that a certain video is authentic, that it is the original. And that's why I always thought we're going to have some sort of, I always call it proof of humanity, that you're not talking to some sort of AI. It's not AI generated. It's actually a human person behind a piece of content, a piece of information. However, now the big narrative over the last couple of months were obviously AI agents, I would say. And I love it because when I talk to my girlfriend about my job, she's bored as hell.
Yeah,
She
I can
falls
relate. I'm
asleep.
sure we all can, right?
Yeah. She's bored. However, when I told her about AI agents, for instance, Siri Bro, and showed her the music on Spotify, for instance, it was the first time where her eyes start shining up, because it was really a tangible kind of example that got her excited. While now, obviously, the AI agent hype is a bit over, and it's always like that with new disruptive technologies or with narratives. You had that initial hype where the entire industry, all the people, they think it's gonna change the world within a few days, but it just takes longer in regards to implementation. So I would say AI agents still have a lot of potential. And I think it could be one of the bigger narratives for the next bull market, together with kind of proof of humanity, so to speak.
Yeah, you think about this technology, and one thing it's very good at, kind of the whole thing behind it, is keeping track of things. Putting things on chain and doing all of this. And there's a real social aspect. I've always said crypto is almost political. There's so many aspects to this industry where it really makes sense as 21Shares to kind of enable it, from people being able to invest in that innovation. And AI, you talk about AI. I think AI is quite a broad stroke word. There's lots of, and so is crypto, but there's elements that cross over. Provenance is a big one. Proof of human, I love that. That's something seems kind of strange and sci-fi-ish, but we are absolutely
It
going to need
does, it does. But you're right with the provenance. It's the same thing. Like, let's say some AI agent is managing your portfolio in the future. How do you know that it actually has the right to do so, or to
Yep.
do certain transactions? So there's a lot to figure out, but I think it's super exciting.
Even in regards to the large language models, you're going to need to, and we speak to companies that tokenize knowledge and create knowledge graphs with it, that run these language models that will be able to provide more of an accurate kind of result in regards to the large language. Because sometimes you'll ask ChatGPT something, we've all done it, and you'll just go, that's definitely not accurate, or this is not, this is historically way out, or whatever it might be. I don't want to get too much into that. 21Shares, mindful of your time. What can we look forward to? What are you guys? There's so much to look forward to already, but what can we look forward to into what you guys are pursuing this year? What products you guys are looking at? What you're enabling? What can we look forward to from 21Shares in 2025?
Definitely. So I think we are quite excited about this year, and we are looking to launch more products. Always bring the best type of product we can to the market. We can't disclose exactly which type of product, but we will definitely follow the big trend and looking at the investment thesis across the board with our research team. We are also extremely excited about the US and what can be done further in the US. Our new currently Bitcoin and Ethereum have been approved, but we are looking forward to have maybe more ETF this year or next year in the US, and allowing even further that infrastructure, as I said, staking. We're trying to ensure that investors can access staking through ETP or ETF, both in Europe or in the US. Expanding, our accessibility as well. I think currently we're only talking about Europe and US, but you have the rest of the world as well. And I think digital asset and crypto has been done for the world and not only for those two markets. So also looking at maybe some expansion on our side to offer accessibility to world investors.
Adrian, anything from you in regards to this year?
I mean, please follow our research, I would say. I think there's a lot exciting things that we're looking at and we're coming out with, especially if you're more on the traditional side. There's a lot of topics that we want to uncover and that might be more appealing to you. But again, as you said, narratives, for instance, like AI and crypto, DeFi, those are some of the things that we discover and look at from a research point of view.
Wow, we'll be following along with all of that. We're going to leave links in the description to where you guys can follow along with everything that 21Shares are up to, and also where you can find both Alistair and Adrian. It has been an absolute pleasure, guys. I really hope we can do this again sometime. Thank you very much for coming on the show.